Next question. The balance sheet of Palash Engineering Services as on 31st of March 2020 is given and the figures are in lakhs of rupees. Share capital is 400 lakhs, reserves and surplus is 105 lakhs, 10% debentures 85 lakhs, cash credit 60 lakhs, creditors 60 lakhs, tax provision 40 lakhs, proposed dividend 60 lakhs. Gross asset less gross block less depreciation, stock receivable means debtors, advances cash and bank. Annual cash expenditure is 4,570 lakhs. You are required to calculate absolute cash ratio, cash position to total assets ratio, cash interval, or it is given a name as defense ratio. I request all of you to go through the question, please. Let us have understanding how to make the calculation of the first answer. Before that, I just want to recall current ratio calculation, then asset test ratio calculation, and then I'll explain you the absolute cash ratio. As far as the current ratio is concerned, it is found as CA upon CL. Asset test ratio is CA minus stock minus prepaid expenses divided by current liabilities. And lastly, absolute cash ratio. So logically we understand the liquidity ratio is going to be lower than the current ratio. Current ratio, liquidity ratio. Now absolute cash ratio will be again going down. What will happen, friends? In the numerator we will be having the cash reserve. In the numerator we will have the cash reserve. What does that mean? That means that say what is the amount of the cash balance that you have right now. Cash reserve is consisting of the cash balance, bank balance, and if at all you have made investment of your excess funds in any investment, that is what we understand is the cash reserve. Means today only, if at all I want to make the payment for the current liabilities, then what amount of the funds is available with me? The first ratio is indicating current assets for every 1 rupee of current liability. This is indicating the amount of the quick assets for every 1 rupee of current liability. And this ratio is indicating that say what amount of the cash and cash equivalent that we have right now for making payment of current liabilities. That is the way the absolute cash ratio is calculated. Write down answer. Answer for the first question. Absolute cash ratio. In the breakdown, it is indicating amount of cash and cash equivalent in order to make payment of 1 rupee current liability. Full stop. Write down formula. Cash reserve divided by current liabilities. In this example, cash reservoir is cash and bank. Cash and bank divided by current liabilities. Current liabilities is consisting of cash credit, then creditors, then it is tax provision, then it is proposed dividend. Okay, cash and bank amount is an amount of 125 lakhs, which is available with me today itself for making payment of the current liability, divided by cash credit is 60, creditors is again 60, then tax provision is 40, and proposed dividend is again 60. So 125 lakhs divided by 220 lakhs. So 125 divided by 220. That is 0.5682. Please write down answer. So this ratio of 0.5682 is indicating we have 56.82 paise for every 1 rupee of the current liability to be paid. This is what this is indicating. Cash position to total assets ratio. I request you to give answer for the second question in the chat box. So the second part of the question can be answered like this. Cash position to total assets ratio. In the breakdown, cash reserve divided by TA. TA stands for total assets. So this ratio is basically indicating that say what amount of the funds that we have, say in form of the cash from every 1 rupee of the total asset in the business. It is an amount of 125 lakhs and the total assets is 810 lakhs. So 125 out of 800. That comes to 0.15625. 0.15625. That is 15.625%. Means for every 1 rupee of the total assets, we have approximately 0.15625 as cash. Okay. One clarification that I want to give you, all of you must be aware, but still from my end, number of times we are provided with the balance sheet of the old format, and in that case we may be provided with the preliminary expenses not written off, discount on issue of the debentures not written off, then that is advertisement expenses, deferred advertisement expenses, like that. Say we may be provided with certain things on the asset side, then the loss, that is debit balance of P&L account. If such kind of information is given, then it would be deducted from 810 to make the calculation of the total assets. And always remember, so this is what you are required to apply for any question where the total asset is going to be used. Friends, this is 15.43. I'm sorry. So it is 125 upon 810. So it is 0.1543. Should I write down the paragraph? In above formula, total assets will be calculated as under balance sheet total minus miscellaneous expenditure not written off minus debit balance of P&L account. That is the way we are supposed to calculate the total assets. Again, higher the ratio is indicating that your liquidity position is sound and vice versa. Friends, these three ratios are also the liquidity ratios. Third is so the cash interval or difference ratio. The next question is cash interval or difference ratio. I request all of you to listen my explanation. Do not write anything. Third question, cash interval / difference ratio. In that A point, listen only, don't write anything. It is calculated in terms of time period. So maybe it is number of days or number of weeks or number of months, something like that. Second, this ratio makes an assumption that annual expense of the company is evenly spread throughout the year. Is evenly spread throughout the year. So this is calculated in terms of the time period, and this ratio makes an assumption expenses of the company are evenly spread throughout the year. For example, it is 4,570 lakhs. So 4570 lakhs divided by 365 days. So assumption is made that so the daily expense of the company is 12.52 lakhs. That is the first, that is the assumption which is made. Don't write anything, let me explain you. This ratio is indicating that for how many days company can survive with existing cash reserve. Full stop. So we can survive for how many more days further, say with this cash balance. That is what say this ratio is indicating. So for how many days you can pull on your existing business without getting the further cash from anywhere. I want you to calculate the cash interval or difference ratio and put your answer in the chat box. So friends, over here the answer is found like this. As I told you, 4570 is the annual expense of the company divided by 365. So the daily expense of the company is 12.52 lakhs. We know that, say, we have the cash balance equal to 125. So 125 divided by 12.52, that comes to 9.98 days, or approximately for 10 days. So for next 10 days, even though we don't have even a single rupee of the cash received, we can still pull on our business for another 10 days. That is what this indicates. So write an answer. Cash interval slash defense ratio. In that write down cash reserve note divided by daily cash expenses. Amount of the cash reserve is an amount of 125 lakhs divided by daily cash expenses. So it is 4570 lakhs divided by 365 days. So it is 125 lakhs divided by 12.52 lakhs. That is 9.98. That is 10 days. Write an answer for the question, then I'll dictate a note to you. Now write down a note for this first point. This ratio is indicating that for how many days comma a company can survive without any cash received. Full stop. Second point, this ratio is calculated in terms of time period comma it assumes that annual expense of the company is evenly spread throughout the year. Full stop. Further write down, higher the ratio, comma sound liquidity and vice versa. Friends, so these ratios are also the liquidity ratios. We have seen the liquidity ratios as current ratio, asset test ratio, absolute cash ratio, cash position to total assets ratio, and cash interval or defense ratio. These are the 5 ratios which are measuring liquidity position of the company.